Hey everybody, Jake here, TrendSpider, to go over the weekend update into the month of April. And quite an interesting month we had for the month of March. A lot of chop until the last few days, and arguably we can call this a melt up, at least at this point. So we'll go over the broad markets, go over Bitcoin, which is always an interesting proxy for risk on in the markets, and then we'll go over some of the main individual names that we go over most of the time. That will be NVDA, Tesla, Apple. ARKK is one that we haven't gone over in maybe ever, so that's going to be a new one, and then Shopify as well. Starting with the SPY, really, one thing that was kind of an indicator here to start the week was simply this MACD cross. Some people don't like to use the MACD cross. Some people think it's a lagging indicator. Regardless of what you think, in this case, it did signal quite a reversal, and it has signaled a reversal, meaningful reversals, really over the last 2 or 3 times this has happened, to the upside and the downside. So really, to start off the week, you did have, not to start off the week, but to kind of start off this move, you did have this MACD cross on March 21st. So that was kind of your first signal that, maybe things are changing, maybe the tide is turning a little bit. And, from there, that's where we have to follow basic price action. So really the main thing to focus on was simply this anchored VWAP pinch. This is a term that Brian Shannon coined, and it's essentially taking the swing high and the swing low, anchoring a VWAP here on both of the swing highs and the swing lows, and it creates this pinch, kind of like how Bollinger Bands create a very kind of contracting setup, and then whenever the bands get really tight, that's when you generally have a big move. And that's exactly what happened here. You really didn't have a trigger until Thursday here when we did close above this area. That was the main area to really watch. Now, for me personally, I like to use these VWAP bands. These VWAP bands essentially capture price action that was above the anchored VWAP. So you've got the anchored VWAP as this blue line here, right? This is your main anchored VWAP. However, you can see there were multiple times where price actually broke above it and actually closed above it a couple times back in February, but did not actually continue up. It was a false breakout. So when I see that, I generally am going to add an offset to capture those wicks and these closes that did occur above the anchored VWAP. And that's how we create essentially these zones. Each stock has its own personality. Each name is going to have a different zone that you want to create because each one has a different ATR, meaning it, or a beta. It has a bigger range or a smaller range depending on the stock. So that is going to change stock to stock or asset to asset essentially. So once we broke out of this area and closed above it, the main area to watch was the gap above. This gap did fill today. A lot of the time you can have gaps acting as short-term resistance zones. In this case, we just pretty much melted up through the entire rest of the day and actually closed above this gap. So all in all, going into next week, this is where you need to switch over to the weekly time frame. We do have a pretty large symmetrical triangle here, and we're right at this resistance zone. You can see here that I anchored the volume by price from what I called the swing high here because that's kind of my default button, but we're going to call that all-time highs. And you'll see that we had a lot of volume aggregating here, creating essentially a launch pad for price, and that's exactly what happened. So from a longer-term time frame, we still are within this symmetrical triangle resistance. You definitely want to watch for a close really above 410. That's going to be your main level. And then on the on the monthly chart, if you simply just turn on the line chart here, and I'm kind of going wasn't planning on doing this, but we're going to do it anyways. If you want to kind of look at the inverse head and shoulders here, you do have an inverse head and shoulders here on the monthly candle close today. We are very close to breaking above the neckline here. I'm going to call it 413 that we need to get a monthly close above on for the month of April. And remember, we do have seasonality. So you really want to use seasonality with your technicals, right? So if you go to pretty much 2009, March of 2009 is pretty much when the market bottoms. Going into April has an 86% win rate. That means that 86% of the time, April closes higher than March. So not only do we have the technical setup, we have the inverse head and shoulders here, we also have very high seasonality going into April. So keep that in mind when you are really looking at not just technicals, but also, other aspects of the market like seasonality. Sure, you can throw macros in there, and if you want to look at, bank collapses and all that, look at headlines, that's great, but that's not going to help you look at basic price action in the market. So, that is kind of what we're seeing here on SPY. We really need to get above that symmetrical triangle resistance zone. And notice here, we don't have a lot of volume above, meaning we don't have a lot of friction for price if we do close above that. One thing I'll mention here is the gap above. So if you turn on the gap snake on TrendSpider here, you will see that we do have this gap above. If it's going to turn on, there it is. We do have this gap above here that fills right around 421.25. So we do have another gap above to fill. That would be your target to the upside if we do continue to melt up. And remember, if you do want to look at all the gaps on the gap detector on TrendSpider, go to the gap factor of 0.1. If you do 0.5, which is the default, and I'll do it real quick here, you're not going to see all the gaps because it's only looking for larger gaps. So make sure to put the gap detector as 0.1 to capture all those smaller gaps on the chart. That is all I've got for SPY. Let's go on to QQQ. And QQQ, talk about just an absolute massive breakout here through this ascending triangle. Ascending triangles generally are statistically bullish, meaning that more than 50% of the time they do tend to break to the upside. You can see here that we have this all-time anchored VWAP zone. The main VWAP here is down right around 316. We broke above that, and then essentially I created this VWAP zone based on previous price action here that you'll see on the weekly chart. So in this case, you'll see here if we anchor the volume by price and the VWAP from this swing all-time high. As I mentioned, I have this swing high button on my chart. So for example, right here, I just click this and it automatically is swing low. I click this, it's automatically swing high. So if you do want to save annotations, that's a great way to do it. All you need to do is right click, go to properties, custom annotations, and that's how you can save an annotation if you do use an annotation a lot. So same thing here. We did break above this huge volume shelf pretty much that's been forming for a while. And obviously there's a lot of price action here. So obviously you're going to have a lot of volume aggregating within this level. The important thing is that we did break above this level. Once we get above these this all-time high anchored VWAP zone, we're pretty much dealing with some open air above. Not a lot of friction for price to deal with. Not a lot of break-even sellers, meaning if someone bought at 330 on the Qs, now they're back to break even. You don't have as many shares above that you may normally do, and that would generally act as your supply zone. So same thing here, just turn on the gap detection, and whenever you have breakouts or whenever you're looking for areas, targets above, targets below, depending on whatever the trend is, just simply look at the gaps. The gaps are going to be your targets. That is always how I come up with most of my targets is literally just looking at what are the gaps above if we're in an uptrend, what are the gaps below if we're in a downtrend. So we have quite a few gaps. First gap fills around 322.25. Another gap above fills around 348, 349. Then we have another gap that fills around 360. So keep those gaps in mind. Gaps are really important for kind of looking at places where the market can magnet to the upside, essentially gravitate to. So those are your levels on the Qs. We'll go into IWM. I don't want to make this video too long, so we are going to run through some of these other names a little quicker now that I've got a lot of the information I wanted to get out initially. So same thing here, volume by price. If you anchor it from the swing high, you just move this over to the swing high candle. You'll see here that we do have this huge volume shelf that price was able to kind of launch off of. Not only do you have a gap above that fills at 181.28, but you have a ton of open space here. Now, this is an area, this is what I call break-even supply. Imagine that you bought IWM at 188, 189. deal with a drawdown to the upper 160s, and then you get back to break even, you may take some off the table. So that's why it's called break even supply, because people who are taking some off the table or selling their position once they're back to break even, that essentially allows the market to kind of hit a resistance zone, because that extra selling creates supply on the market. Now, this is where things get a little interesting, especially for IWM. You always need to know what the bull case is, but also what the bear case is. The bear case in this case for IWM would simply be this SR flip, right? You've got the trend zone starting from March of 2020. You've got a couple areas here that were connecting that respected this zone. We broke down through it. Now we're retesting it. So if you can't see what I'm talking about, this area right here. So pretty much until we can get above, let's say 182, 183, that is going to be kind of the magic number for me on the upside, especially if we can get above this area here, this break-even supply zone, anywhere from around 187 all the way up to around 190. That's really when I'll get a little more excited with IWM. IWM is definitely one that doesn't look as good as SPY or the Qs. Now we'll jump into Bitcoin here. Definitely something to watch over the weekend. Remember, I do these videos on Fridays, so this is going to be a little stale information if you're watching this on like a Saturday, but still I'll give levels to watch above. Main thing here is if you anchor the volume by price from the swing low, you have this volume shelf. You have a lot of volume supporting price, clearly because we have a lot of price action here, so naturally you're going to have more aggregation of volume within this area, creating the shelf. Now, the main area that you really want to close above is simply this area here. So pretty much if we can close above around 28,850, I think that's definitely going to trigger a move to this area above, the all-time high anchored VWAP zone here. That goes all the way up to around 29,500. But if you do want to capture this wick that did wick above the anchored VWAP, this is when you throw in an anchored VWAP offset. So I have 1.5 here because that's just the last percent that I used. If you use 1.5 on a previous chart, it's automatically going to default to that on your next chart. So let's do 5%. You'll see that 5% offset does capture this wick and maybe a little more. So if you want to be really kind of cautious here, pretty much up to around 30,500 is going to be an area where we're still not quite out of the woods yet. So all in all, that's Bitcoin. Definitely keep an eye on, let's say, 28,875. Keep an eye on 29,000, right around 29,350, and I'll show you why. We'll do another band here at 2.5, kind of in the middle. And so now you can kind of almost use these three different bands as here's kind of like not too cautious. Here's where you're getting cautious. And then the top here is where, very cautious. And if we break above, that could spark another uptrend. So that's really how I like to use the anchored VWAP. I'm a big fan of the offsets. Some people aren't. I know Brian Shannon, who pretty much taught me everything about the anchored VWAP, doesn't use them as much, but for me they work, and whatever works for you is what you should do. Going into NVIDIA, NVIDIA has been in absolute beast mode. Essentially, you had the bull flag breakout here on the daily chart earlier this week. Huge engulfing candle here on the daily for Friday. And now on the longer term chart, you'll see here that these March 2022 highs are really what is going to be kind of your make or break. So pretty much from around 383 all the way up to around 386 to 388 is where you're definitely going to have to consider maybe being a little more cautious. But for now, I mean, why try to short this uptrend? Why not just follow the trend? A lot of people have gotten burned trying to trade NVIDIA. I took a puts here actually 2 weeks ago and came up with a thesis. I posted it if you want to check out the thesis. Literally just go in the search bar and type in my handle and then go to NVIDIA and thesis, and you'll probably find it pretty easily. And simply the thesis was, once we closed above this high, the bear thesis was invalidated, and that's when I stopped out. And thank God I did, because we just kept going up. So that is something to consider. 383 to 386, 388 at the highest is definitely where you want to maybe get a little more cautious, but still very strong uptrend here. Tesla, absolute beast over the last really couple weeks. Today was a little more beast mode, if you want to call it that, than usual, but it was very simple, right? You had your swing low VWAP zone here, volume by price here. You had this huge volume shelf. So whenever you have a technical setup like a bull flag with price breaking out like we had on Thursday, right at the point of control, the volume shelf can definitely turn into a launch pad for price. There's not a lot of volume above to act as friction, and that's exactly what happened. Now, this is where we're starting to hit maybe an area where you need to be a little cautious, at least in the short term, couple weeks, medium term, maybe a month. This is a big area to break above. Simple SR flip, previous support back in May of 2022, October of 2022, and then now resistance we saw in February. We're getting back up to this area of resistance now. You've got a very clear cup and handle here on the weekly chart. I'm not really incredibly bullish. I'm definitely bullish up until around 218. But until we can get above that area, pretty much the high that we saw in February of this year, pretty much right around 216, 217, just a retest of those highs for now. Now, if we break and close above that on the weekly, that's when things get very interesting for Tesla. Apple is the next one we'll look at. Another classic SR flip here, and another one where you simply just look at where's another gap. You have a gap above 171.52, and it doesn't have to be hard. I try to look at the markets as simple as possible. I can get distracted very easily, so the more things on the chart for me, the easier it is to think of something. Maybe this is how it's going to happen. Maybe that's how it's going to happen. Just use basic stuff, basic SR flips, basic gaps, anchored VWAP, volume by price, and occasionally your diagonal resistance zone if it makes sense, support zone if it makes sense. But really, from the weekly chart, you can see here that we did break out of this inverse head and shoulders. If you're looking at a potential diagonal resistance zone above, that's anywhere from around 167 all the way up to around 170. That does align almost perfectly with that gap above, so keep that in mind for more upside here. And then if you look at the monthly chart, this is where things get really interesting. If you compare pretty much 2021 and 2022, this kind of falling wedge here to now, you'll see we have a very similar pattern. We were kind of coiling here. We broke out in July of 2016. We were pretty much coiling here all the way up until around February. We broke out, and now we're really starting to move towards all-time highs quickly. So, don't fight the trend. That's something I've done in the past, and it has not worked out very well for me. If you are in an uptrend, maybe look at buying the dips. Don't try to short and try to catch the top. An uptrend is called an uptrend for a reason. It's going up. So that is something to consider. Obviously, your main area you'd want to get above is right around the highs here from December of 2021. Let's call it, I think it was 183 or so. So that would be definitely the main area you want to close above. But on the monthly chart, your monthly close was right around 177. So a monthly close above 177 would definitely trigger a bigger move to the upside as well. Going into ARKK, Kathy Woods, man, she has not done well over the last 2 years, but things change, trends change. So check this out. One, we did have a breakout here of the symmetrical triangle. The main thing that we didn't get above is this horizontal resistance zone that we pretty much have tested in February, early March, the third week of March, and then today as well. So if we can close right around 41, I think this really has some legs to the upside. One thing I'll mention here on the weekly chart, and let me move that here. These are the all-time highs. You want to anchor the volume by price from the all-time highs when you're looking at this far out. You'll see you have a lot of volume supporting price here, right? The main thing that I'll mention here is the point of control. The point of control is essentially this largest volume bar here, right? So this shows there's a lot of volume that has aggregated pretty much from around 37 all the way up to around 40. And so the fact that we had a weekly close above that area is definitely something to consider for the upside. You have a very classic inverse head and shoulders here. Now, one thing I will mention, if you want to use basic moving averages as a trend, we are still within a downtrend. We have the declining 50-day moving average, but if you throw on the 50-day moving average, the 50-week moving average, and then you throw on the 20-week moving average, you'll see that, the short-term trend here, i.e. 1 to 2 months, we're actually starting to flatten out here. Now, the 20 crossing above the 50 would definitely be a thing you would want to look for. Now, sometimes that's going to be lagging, right? If you wait for the 20 to cross above the 50, ARK may be up here at $50 a share. So it is safer, but you definitely do want to look at general patterns as well, like this inverse head and shoulders, the fact that we have a weekly close above the volume shelf point of control, and you don't have a lot of volume above to act as friction for price. If you want to get even more kind of into how this looks, you do have, and I really don't want to change this chart, but I will. Let's just move this thing up here real quick. Let's turn off the volume by price. You kind of have a flag here, right? Simple bull flag. And we're trying to break out of it. So obviously, when you have an inverse head and shoulders, you're going to definitely have a little bit of a flag. That's part of the right shoulder. But, both things, inverse head and shoulder, possibly bull flag breakout, price above the volume shelf point of control, all things that are generally not looked at as bearish, but you definitely do want to look at those longer-term declining moving averages still. The 200-week, the 50-week, the 200-week is barely declining, but the 50-week is definitely still declining. A weekly close above this 50-week moving average, which is almost exactly where we closed, would definitely be some people's trigger to go long here. But everyone has their own strategy. Everyone has their own entry and exit criteria, but something to consider. Very, very interesting setup going into the month of April. Now, same thing. Why don't you look at seasonality? I haven't even looked at seasonality, so we'll do this together. So pretty much going back since inception, going into April, April is one of the strongest months of the year with a 75% win rate. And the other months are January, July, and November. Pretty kind of normal seasonality for the overall markets. But just combine technicals, seasonality, and you've got an interesting picture going into the month of April. Last one is Shop. Shop has really caught my eye for a couple of reasons. One, we bottomed way back in October. So, clearly a short to medium term uptrend here. Main area on the short term side of things that you want to keep an eye on is this gap fill at 50.21 above. Now, as always, gaps can fill and then act as potential resistance zones, so keep that in mind. But then if you look at the weekly chart, you have this symmetrical triangle, just really price is coiling very, very tight right at the apex of this area. So if we did break out, 51 all the way to 53 would be your initial area. Simple SR flip. Previous support back in March of 2022. Resistance back in late January, early February. So that naturally is going to be your area that you want to initially look at as upside. If we break above that, that's when things get really interesting. Once again, throw your 20, your 50, and your 200 on here. And you can see here that we recently had the 20-week cross above the 50. And you can see here that the 50 is starting to kind of slow down as a function of slope, meaning that it's not as steep. It's starting to flatten out. So all of these things are something you should consider when you're looking at basic trend. Moving averages can be looked at as support and resistance, but a majority of people use moving averages for looking at basic trend. If you want to look at the short term, look at the 20. If you want to look at the medium term, look at the 50. If you want to look at the longer term, look at the 200. At least that's what I like to use. If you want to use other ones, great. Just sharing what I personally like to use. That was a lot of information. Hopefully this video was helpful, not only understanding kind of where we are going into the week ahead, but also some of the basic indicators and functions on TrendSpider, such as the gap detection. That's a huge one, especially when we are moving up and we have gaps above to watch. And And then remember, we do have a sale going on. So we'll put the details in the comment section or description section, about that sale. And if you want to get TrendSpider, give it a shot. We definitely appreciate your business and you being a customer. And once again, this is definitely not any type of financial advice. This is simply an overview of the markets going into the week ahead. I hope it was educational, and hopefully it maybe gave you some trade ideas to use as a resource for your own strategy and your own risk tolerance, all of those good things that go into actually making a trade. Everyone have a great weekend. Thank you for watching, and we'll see you next time.